Rising wedge and the possible exhaustion gaps continue to dominate many various charts of stocks and ETFs. NASDAQ is currently at resistance. However, on a positive note, we have three big sectors hit all-time highs, including junk debt, high-yield bonds, consumer staples, and healthcare. Gold is again at all-time highs as dollar continues to falter, and we will look at crude oil, whether or not it will continue dropping. All this and more in today's edition of MasterChartsTrading.com market recap for Friday, August 16th, 2024. Please don't forget to hit the like button, subscribe to the channel, make a comment, share this video, ask any questions you like. If you're a subscriber, stay tuned. We'll be covering various securities, namely market breadths, as well as a very important, in my opinion, stock, DJT, also known as Donald Trump Media, and the implications that its current price action is will or possibly will have for elections. So if you're not yet a subscriber, consider signing up. Also, we'll cover some ETFs, large cap stocks, various speculative securities, as well as gold and silver miners. As always, I'll be using my proprietary MasterChartsTrading.com market indicators, which you can see on this chart. You can sign up for these lines on my site. All right, so we had a drop from, okay, let's go back a little bit to July. So we had an all-time high here on the 16th of July. This is S&P 500, and pulled back into early August. So on 5th of August, we kind of made this low without not yet touching this blue support resistance line. So that's that's one of the reasons why I'm sort of ambivalent to jump into the market right now. Is it because we sort of corrected, but not deeply enough, for me to consider jumping in the market, because I like to see deeper corrections, basically. So right now, and then afterwards, basically on the 5th of August and until now, until today, we've been rising in this possible rising wedge formation, which I have highlighted here with the white dotted lines. So rising wedge formations usually imply it's a bearish continuation pattern. So if or when we see a break below this lower trend line, then most likely we'll see a pretty significant move down to at least retest the lows from this wedge, beginning of the wedge that started on the 5th of August. However, we've been rising for 2 weeks now. In fact, we can look on the weekly chart, and there's the weekly chart, and you can see that we had two very strong green weeks, and we're very close to all-time highs. So what gives? I don't yet know if this is indeed a rising wedge. I don't normally trade off of the chart formations. However, sometimes they sort of jump at you. And this is one of those situations where this sort of jumps out at me. So I'm sort of reluctant to do anything for multiple reasons, and I'm about to explain them. So number one is this fact that this could be a rising wedge, and if we see a break, then most likely we'll retest this blue support resistance line. If we do retest this blue support resistance line for S&P 500, which is currently around 5,080, in that case we'll be considering buying it around there. Another reason why I'm sort of reluctant to jump in is because of this possible exhaustion gap that occurred between 14th of August and 15th of August, so between Wednesday and Thursday of this week. Notice that on that day we see a jump in price between Wednesday and Thursday, and after such a steep ascent, this could be an exhaustion gap. In other words, when the security does continue one way, for example up, and then it gaps up at the very end of the run that sometimes can be referred to as exhaustion gap. Is it actually an exhaustion gap? Is not yet clear. Additionally, we see several previous peaks here. So for example, a peak from 23rd of July and two candles from July 31st and 1st of August. So we're currently there. We are approaching, or that we have touched that level. So that is another resistance level. And we're basically there right now, and we're waiting to see which way we're going to break. So over the weekend, it will be kind of important to watch, especially on Sunday evening, where is it gonna go. If we see even a close of this gap between the Wednesday and Thursday of this week, then there is still a chance at what I'm trying to explain. The reason why I'm so cautious right now is that because of this wedge could break and we could retest this blue support resistance line. This entire kind of drop and now a raise it's a V-shaped reversal basically. So we have it's a V like victory. Do they happen? Yes, they do happen. Sometimes they happen and sometimes they don't happen. There is no way to tell in the future, predict if this particular reversal will be indeed V-shaped reversal. We will just make new records. If we make new records, then we can just relax and find other opportunities. And that's another reason is because we don't just trade, ETFs. We do trade ETFs. This is equivalent of ETF, but sometimes you don't get this. You miss the entry. So what do? If the stock market is in a bull market and an uptrend, then we can trade all kinds of other securities. For example, large cap stocks or speculative securities that I mentioned. So for now, I'm basically watching this, and if we make records, then I can pretty much relax. If we don't, we can fill this gap from between Wednesday and Thursday of this week, and potentially continue down with this wedge break if it occurs. Another chart I'm looking at right now is QQQ. This is NASDAQ. This is a little bit more, even more obvious. So notice that right this instant we are retesting this green support resistance line as we speak, right there. So is this going to be acting as resistance? Again, we will find out very shortly. So we have multiple things here. So we have the my green support resistance line, and we're below that level. So we're going to possibly see resistance. We're seeing a peak from August 1st. We're seeing a gap between 23rd and 24th of July, and the lower parts of the candle here from July 19th. All of these are currently coming in as resistance, and so the same goes for NASDAQ QQQ. You can see this perfectly shaped channel-like structure that began on the 5th of August and continues to today. So this is a possible rise in wedge, and again, if we break this rise in wedge trend line, then we could see a significant move lower and possibly retest the lows from August 5th. Again, we will see if this actually occurs or not. Now, not all news are bad, obviously. Right now we are looking at high yield bonds, J and K. So high yield bonds barely budged. There's the low from August 5th. There's the previous all-time high from 1st of August. And we dropped a little bit. It was not even remotely oversold. And then we turned around, and a few days later we continue making all-time highs. So the reason why I care about high yield bonds is because of the high degree of correlation between high yield bonds, this is J and K, and this is a correlation to the S&P 500 down below here. You can pretty much see that the correlations are very high. Whenever S&P 500 does one thing, high yield bonds usually does the same thing. So when I see high yield bonds hitting records, I begin to immediately wonder if this is a leading indicator for S&P 500, and maybe my concerns about rising wedge formations and all that are just totally unfounded, and we will just turn around and make new records. Entirely possible. So that's why I'm giving you kind of two perspectives, one slightly less bullish than the other. They're both bullish perspectives though. Another one that hit all-time high is the XLP, Consumer Staples. Okay, there's an all-time high. And additionally, XLV, Healthcare Fund, also hit an all-time high. So some sectors and high-yield bonds, some sectors of the stock market and high-yield bonds are hitting all-time highs. And perhaps, my concerns once again are completely unfounded, and we will just turn around and we just continue higher and make new records. I am glad to be proven wrong. I have no problem with that. In fact, once again, we are trading stocks on the upside, and so if we miss the ETF, we can always buy something else. There's many securities, and because of the high degree of correlation between the individual stocks and the general stock market, we can pick and choose what we want to buy. Let's switch gears slightly. Right now we're looking at the dollar currency index, DXY. So until very recently, notice this upward facing arrows. Dollar was technically speaking in an uptrend. Then we saw this turnaround. There's the break below the blue line on the 11th of July, an attempt to recapture it on the 30th of July, which failed, and then a few days later we see a big drop, and finally a close below this red support resistance line. Again, you can find out more about them by going into the description of the video. So now, since 5th of August here, we see dollar in a downtrend, and in fact we closed. This is a lowest level close since beginning of this year, basically. Before we had intraday lows, but this is this is the lowest level on a closing basis. So right now we see dollar in a downtrend, and by extension we're seeing gold hit new records because we're trading gold in US dollars. So it's XAU divided by USD, gold divided by US dollar. As I just showed you, the dollar is making lower lows and lower highs. It's getting weaker. And now XAU divided by USD, so the bottom part of this equation got smaller, gold got bigger. Makes sense. Congratulations. These are all-time highs. We've been trading, you can see this upward facing arrows. So latest opportunity to buy was back in February, and now we're at all-time highs. Also, I do occasionally trade others, precious metals besides gold. Here's silver, for example. In fact, I have a position. I bought silver ETF a few weeks ago in late July of this year, and now we're again surging. So it looks like silver will also continue higher because silver is also traded in US dollars. So it's silver divided by US dollar. The US dollar part of this equation is getting smaller, silver is getting bigger. Makes perfect sense. So I would be continuing to hold precious metals. Look for opportunities in precious metals universe as well. Finally, I wanted to look at oil, light crude oil, and let's look at the weekly chart first. So there is a weekly chart of oil. So here I highlighted this box somewhere between $63 and $71, and it seems like that area is basically like the floor for oil, and it just doesn't seem like it wants to continue lower. However, could we see something different this time? It's entirely possible. We're seeing several things that are of interest. So first of all, oil is currently in a downtrend. Notice that we have closed below this red support resistance line. back in May. We attempted to get as high as blue line, which means it would have been in an uptrend back in early July, but we got sold with a vengeance, and now we have multiple bearish signals. So I personally opened a short position in oil by buying an inverse ETF called SCO. So I'm currently holding it. I'm almost at the target, maybe a little bit more. If we look on the weekly chart, I really like this action. I mean, I like it in the sense of I'm bearish. So notice this candlestick. This is a weekly candlestick. This is a shooting star candlestick. So we have, another signal basically to sell it short, which is high above this red support resistance line, which is at 77.96. Again, you can find out more about them by going to the description, and then close below it. So we have multiple short signals for crude oil, which is, in a sense a good thing, but in a sense people start to wonder, if oil goes down, does that mean the economy is also going to go down? And for that, I wanted to show you this correlation coefficient between oil and S&P 500. So as I just showed you a few minutes ago, here's JNK, high yield bonds, correlation to S&P 500. And notice it's very, very high. So generally speaking, high yield bonds and stocks correlate highly. They're doing the same thing. If we look at correlation of oil to the S&P 500, you can see it's all over the place, especially of late in 2022, 23, and 24. Sometimes S&P and oil are doing the same thing. Sometimes they're doing exactly the opposite thing. Sometimes they're just doing something like in the middle, not really doing anything at all. So some people like to think that crude oil is like a driver of the modern economy, modern S&P 500, etc., of the market. So they say that if stocks drop, then oil also will drop, and vice versa. Maybe oil will drop, that means stocks will drop. But again, look at this correlation going back to 1984. It's all over the place. Sometimes it's doing the same thing, sometimes it's not. I think the reason why people think that it quite often does the same thing is because of this period of high correlation between the 2008 and like 2013. But again, I am far from certain that the correlation between oil and S&P 500 is even worth noting. It's not. I don't think there's a correlation. So I'm going to take oil separately and sort of like in a vacuum. If oil drops, that does not mean that stocks will drop. Okay, it just means that there's less demand for oil. Okay, and does not mean that there's going to be a recession. So for now, I'm looking at oil and I'm shorting it. I sold it short. I'm holding short position with my stop being at the blue support resistance line. Hopefully we'll get to the target, which is not that far away, which is like right by the yellow line. So $72. Again, we had multiple attempts to pierce that $60 to $70 area, and so far has failed for the past 2 years. Will this time be different? All right, that's it for this week's recap. Thank you for watching all the way till the end. And if you want to sign up for the indicators, this lines on the chart, head over to MasterChartsTrading.com and click on sign up. So again, I have 3 products. I have the indicators, the newsletter, and both together, trading indicators and newsletters. So indicators are these lines on the chart. They are available for TradingView.com. TradingView.com is a free interface that is online. You don't need to download any apps or anything like this. Although you could if you wanted to. There is an app available. Once you download the app, go to my site, MasterChartsTrading.com, sign up on my site, and I will open the door for you on TradingView.com. At a yearly price of $24.95 per month equivalent, it's the best deal out there. Newsletters, again, this is what I send out on daily alerts on various securities. So, for example, this week we will look at market breadths as well as Donald Trump, media stock, DJT, as well, and the elections implications. And I tell you, if you're a Trump supporter, the chart analysis doesn't look good on this one. So again, we'll be looking at various securities, various stocks, and if you just want the newsletter about what we trade, you can sign up for that, $33.29 per month at the yearly price, which is 17% off. You can also get the monthly. And I think the best deal, of course, is to get both trading indicators and newsletters at a yearly price. You can also get it at monthly prices. Thank you again for watching. Don't forget to hit the like button, subscribe to this channel, make a comment, share this video, and have another great trading week. Bye-bye.